Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube station. I'm talking today about if you're self-employed, you're more likely to go ahead and get audited by the IRS. I've worked thousands of cases. I have a whole team of former IRS agents on staff. I've been on the national news many times on all the major stations, not advertising, actually being interviewed. And you can go to my website at 777irs.com and you can see my videos. But more important, my team of former IRS agents, you're welcome to contact me at any time. Self-employed people are the most likely people to get audited by the IRS. There's been a lot of talk about what group. Is it the rich? Is it the poor? Is it this? Is it that? Well, the two groups, believe it or not, that are audited the most have a reason to be audited the most. First of all, the rich, the very rich, a certain percentage, about 12% of all those returns do get audited by the United States. You may be surprised, but the vice president and the president's return get audited every year. There's a lot of talk about that. But the reason that the low income are being audited, first of all, there's more of them, and there's very few W-2 wage earners being audited unless they take a lot of credits. IRS has a lot of filters for credits, so if you're taking a lot of the credits they offer, it's like cash, you're going to be audited because IRS has the filters and they know when you're cheating. So if you're self-employed, why you're going to get audited is IRS knows through not even research, but all their audits, they find the self-employed people tend to cheat more. Where do they cheat? They cheat in two areas. They don't report their income and they over-report their expenses. So how does IRS keep track on this? Does someone look at your tax return and say, wow, this is really, this is worth auditing? No, the IRS computer actually audits your tax return and sends it to someone. IRS has what's called a DIF score process, a discriminatory index function score. And if, as former IRS agents, if we look at returns, we know the returns that are going to be audited. We can just tell they're just out of line. They just don't make sense. But the DIF score analyzes the returns based on your income, your expenses, your deductions, and boom, it goes ahead and pops an audit request, and it sends a batch of these tax returns down to the local office. There's certain graders that look at the returns. They mark which ones are going to should be audited. They send them back to the service center. The service center then goes ahead and sends the highest scored returns back to the local office to get audited. That's the audit process. And if you're self-employed, that's exactly what's going to happen. Your return generally fell out of the norm and the averages, and they kicked out an audit for you. You need audit help, IRS help, give me a call. Give me a subscription if you would. I have about 1,800 videos out there. I give you everything you need to know. Contact me anytime and do whatever you need to, but give me a subscription. Thank you.